As we look at how the market kicked off the year, we saw stocks rally in January, correct in February, and slump in March as volatility and economic policy changes took some of the enthusiasm we saw last year out of the market. Washington kept busy with the White House announcing new tariffs on China and naming Larry Kudlow as Chief Economic Advisor. Additionally, Jerome Powell began his tenure as chair of the Federal Reserve. The Nasdaq Composite advanced for the first quarter, but the Dow 30 and S&P 500 did not. Most major Asian and European benchmarks also retreated. Overall, the placid market climate of 2017 vanished, giving way to trading sessions marked by significant ups and downs. In the U.S., the Trump administration announced tariffs on foreign steel, aluminum, and other assorted products from China. China responded that it would reciprocate with excise taxes of its own. Weeks after Powell took over as Fed chair, the central bank made its first interest rate adjustment of the year, a raise of 0.25%. Currently, 2 more hikes are projected for this year, 3 in 2019 and 2 in 2020. Business growth looked good in the first quarter. Correspondingly, so did hiring. The Department of Labor's estimations show impressive net job gains in both January and February. Consumer incomes rose 0.4% in both January and February, paralleled by consecutive 0.2% gains in consumer spending. The Department of Commerce reported retail sales fell slightly in February, which tends to indicate consumers were saving rather than buying. In Asia, things looked better for China's economy as the quarter ended. Economists forecast China's growth rate to decline slightly to 6.6% in the quarter. Vietnam looked like the star of Asian economies in the first quarter. Its GDP was over 7%, and its exports were up 22% year over year. In its March statement, the European Central Bank forecast growth in the Eurozone through 2020. MSCI's 2 closely watched benchmarks rode through the first quarter turbulence without much damage. The MSCI World Index fell 1.8%, and the MSCI Emerging Markets Index just under 1% at 0.93. Bitcoin was the worst performing major commodity of the quarter, losing nearly 40%. Other notable commodity and currency gains in the first quarter include WTI crude, gold, and unleaded gasoline, while the US dollar index and silver both saw losses. In the first quarter, home loans continued to become more expensive. At the end of March, the 30-year fixed mortgage rate was over 4%, up from 3.99 in December. After falling for 2 straight months, existing home sales improved 3% in February. Demand overruled some serious headwinds that threatened to hold sales back. New home buying, however, declined for a 3rd consecutive month in February. At the end of the first quarter, the Nasdaq Composite had managed a decent year-to-date advance, unlike the Dow Jones Industrial Average, S&P 500, or Russell 2000. What could our current quarter hold? All 3 major indices sold off significantly as the second quarter began. Investors hope that the March jobs report and the start of a new earnings season will restore some optimism to the market. Housing and retail sales aside, fundamental economic indicators have looked good for the most part. The anticipation and results of this coming earnings season could take investors' minds off recent headwinds, but a continuation of the volatility we witnessed in the first quarter would not be a surprise. If earnings can distract Wall Street away from concerns about trade, the slump in tech shares, and the Fed's plans for tightening, then the tone might be set for a better month and quarter than some investors expect. For now, the feeling that a promising year for equities might turn into a poor one continues to persist. As always, your relationship manager is available to discuss in more detail this quarter's economic update or any questions you may have. Thank you for the trust you place in us. It is our honor to partner with you as you live out your life plan.